For me, I think the best example I've ever seen of someone buying the dip was a client I covered during COVID. And do you remember the Rolls-Royce rights issue?
I do, yeah.
It was a huge dilution of the share price at the time. You know, Rolls-Royce's main business was airplanes, it was servicing engines, it was servicing all this kind of big infrastructure. And of course, well, that got stopped. So Rolls-Royce were up a creek without a paddle, and they needed to raise cash quickly. So I think they diluted something around 60 to 70% of their shareholder base. I could be completely wrong, but the number that's in my mind is 45p.
As a rights issue, was it?
As the rights issue. So if you held stock, you could have bought the dip, you were given more shares, and you could have bought more shares at a huge discount to the current price. And I remember at the time, you know, we didn't know when COVID was going to come back on. It was a big play for a company that had really fallen from grace. You know, I had a guy that took part in 45p and as many as he could get hold of and chucked them all out at about £3. You know, almost 8-9 times his money. It was fantastic.
Yeah.
But ballsy, right? It was a huge, I'd say on a risk basis, complete wrong way to do it, because you've thrown what you thought was good money at a huge dilution. In hindsight now tells us that it was a very good play to do.
Yeah.